Effective Credit Management Strategies and Post-COVID Bounce Back webinar. I'm joined today by Matt Godby of Godby Credit Management and John Harlow from Harlow Insolvency and Corporate Recovery. I'm going to pass on to both of the gentlemen very shortly to introduce their companies, but both companies carried out a survey back in May 2020 looking at the impact of COVID and how the financial impact was affecting businesses. So we've come together this afternoon to share some of the findings from that questionnaire and survey that was carried out. But also it's an opportunity for you to ask any questions for Matt, for John, for Claire, any of us on the call today to see how businesses are being affected and if there's anything that we could do jointly to help and support each other going forwards. So firstly, I'd like to pass over to Matt, just if you want to give everyone an introduction to Godby Credit Management.
Well, yes, good afternoon, everyone. Thanks, Claire, and good to have everyone on the call. Yeah, my name is Matt Godby. My business is Godby Credit Management. So I provide strategic credit management services to SME businesses and also large corporates. My background is far and wide. Over a 20-year career, I've provided services to businesses in a wider range of different sectors, from healthcare to logistics and telecoms, and also the legal sector. I particularly help businesses with problems they're having with their age debt and also with engagement with customers. And very much that latter part is what I focus on with businesses. There's a real kind of issue with many businesses in the engagement with their customers, from talking about money and being paid by the services and goods and services they're being provided with. And that's something that is perhaps put into some stark contrast in the difficult times that we're in. And we'll go on to more about that, no doubt, as we go through the call. But good to have everyone on board, and thanks for joining.
Thank you, Matt. John, would you like to introduce your business?
I will. Yeah, good afternoon, everybody. As Claire says, my name is John Harlow. I'm a licensed insolvency practitioner with my own practice, John Harlow Insolvency and Corporate Recovery, intriguingly named. I've been doing the job now in insolvency for very nearly 36 years. So I've seen a lot of changes in the profession during that time. I work out of Leicester. My office is on New Walk in Leicester, and we're currently locked out of it. As you probably know, Leicester's in a bit of a pickle at the moment. We deal with, well, financially distressed individuals and companies in the main. Our primary aim is always, when we get called in to have a look at something, is to see if we can rescue a company, turn something around. If not, then we have the tools at our disposal to give an orderly winding up for a company, a liquidation. As insolvency practitioners, we have quite a large toolbox available to assist in helping businesses. If we get called in early enough, a lot more of those tools are available. Just to run you very quickly through it, I don't want to bore people with insolvency. I'll just, there are rescue tools which are available to us, which is administration, company voluntary arrangements people may have come across in their time. And very recently, the government during the lockout period have introduced a raft of new measures to assist businesses supposedly during the COVID, and people who have fallen foul and had problems because of it. There's a moratorium which has been introduced. Only came in at the end of June, so none of us had a chance to use it and see if it's going to have any good effect. But basically what it gives is, through the court, a breathing space of, say, 20 days immediately, whereby there's a ring fence around the company, and so no creditors can proceed against them during that period. It is extendable with the say-so of the creditors, or the creditors saying yes, for further 20 days to 40, and that can further be extended to a year, we understand, with the courts say-so. So the problem with it is, as we see it, is that the moratorium's got to be put in place, and it has to be as likely as not, or more likely than not, that the company will survive, not just the business. So we're all getting our heads around whether that's going to be something which can be used in the future. I suspect there'll be stuff coming out of COVID when we come out of lockdown, where we're going to be looking to see if that's a useful tool or not. And as Matt says, that's probably something we'll be looking at further on down the track as we discuss the survey and other questions which may come off the floor. So those are the rescue tools. We can do solvent winding up, as people have probably come across, members' voluntary liquidations. This is where people basically want to put their business to bed, and they can have a tax effective method of distribution to the shareholders as capital rather than income. I'm not going to dwell on that for too long, or at all. And then businesses which have really come to the end of the line, there's the formal winding up procedure of a creditor's voluntary liquidation. Again, that's really just putting it to bed, a decent burial, if you will. So those are the sort of things that that we get up to. People always say, well, you must be very busy during this period. We're not. Although there's been headline insolvencies, which you've all seen in the news, especially on the high street, the SME type businesses which we deal with in the main have been very quiet. We've hardly seen a new job during the lockdown period, the last 4 months. This wouldn't normally happen, so we have to think that there's something else going on. Again, this will be a discussion point later on today. And we do expect, however, that as we come out of lockdown, businesses are going to experience some financial difficulties, and they probably will be calling on us to see if there's any way that we can assist. In the same ways, they'll probably start off by talking to Matt for advice and assistance on managing their finances through this period, and indeed, as I say, as we come out of it. That's me. Claire, back to you.
Thank you very much. Thank you both. So just to give you a little bit of context, the survey that was carried out in May 2020 was sent out to clients' contacts of both respective companies, and also circulated on social media to try and get a bit of a flavour of what was happening in the market, how businesses were coping, what areas could be looked at for further support, and also how were there any key indicators that could come to the forefront, so that John and Matt could actually share some of their experience and expertise with their client base. So the survey was carried out over a just over 2 week period, and the results have come back, and we thought we'd share them with you. So I'm just going to share the screen because I think it would be interesting for you to see some of the results. So the first question that we actually wanted to have a look at is, like I say, we sent it out to respective clients, contacts and peers of both companies, and we wanted to see which industry sectors things responded to. So the results came back as a very, very mixed broad spectrum of companies. The other that you see at the bottom included everything from travel to research to training and education. I think Matt and John, I think you had some thoughts on this, certainly with regards to where retail fitted in.
Yeah, I think I'd quite like to talk on that one. So I think with retail, as we all know, the retail industry was hit first and very hard, and it's interesting to see how that industry is opening up now, and how it's being affected. Not only how it's been affected throughout the period of time of lockdown, but I'm finding it particularly interesting to see how retail is being affected now. Certainly now that lockdown is easing, there was I read the other day that the government is very keen for people to actually go back to work. And as opposed to actually working from home, and the rationale behind that is that working from home means that people aren't going into the offices, so they're not spending on the high street. People are working from home and they're having their lunch at home, and they're not going out on the high street and spending. So that was quite interesting. So it'll be really intriguing, really, over the months to come, and possibly well into next year as to how the retail sector will recover from this, and not just the shops on your high street, but all the suppliers and all the other businesses and services that feed into that area. John, what do you think?
I can't do anything other than really agree with you there, Matt. I think it presents its own problems. It's a bit of a shame. It's quite interesting in its way, I suppose, that the industry sectors who we included but who responded, we got zero back on the retail front. So really our little survey hasn't given us very much in the way of clues. Equally, the fact that it was, we sent this out in May, and I don't know where time goes, but we appear to be approaching August quickly now. I think retail's in for a torrid time, quite frankly.
Yeah, I think it'd certainly be interesting to. We were saying just on before the call that May seems a long time ago. So it'd certainly be very interesting if we reran this survey just to see where that sat. I think it'll be really interesting to see how the legal sector progresses as the year goes on. There were quite a number of respondents on it in the legal sector. Yeah. And I think Claire will go on to some of the stats that come out of the legal sector a little bit later on. But yes, so there's some interesting stats to come, guys. So keep on the line.
Excellent. So I think one of the questions that we really wanted to assess was how confident businesses felt with how long they could survive if lockdown continued, if there was a second lockdown, or if things stayed the same, how long do they think they could survive in current trading standards. And again, the results, certainly for myself, were quite interesting to see that there was a lot of businesses were feeling very confident about how they were operating. Matt and John, is this something that you are seeing in the industry, in the marketplace?
John, do you want to go?
Well, we're not seeing a lot at the moment, as I mentioned in my opening statements. It's very quiet, and I suppose the suggestion would be, with us being exceedingly quiet, that people are coping. But I suppose you have to ask yourself why and how they're coping. And I think, the government's measures that they've put in place to assist, the furlough schemes, the borrowing that's been able to happen, have enabled people to tread water or to mothball their businesses during the lockdown. I think back in May, people were probably thinking it wasn't going to last as long as it actually has done, which is why, as you say, Matt, it'd be interesting to see some more up-to-date figures now, because the problems are people are going to get through this period, but they will have built up a raft of debt. And I think as we start to come out of it, they will find out whether or not they will survive. And I think what we're going to see is people who have spent the time usefully, if they're not been able to work, or even if they are still working, planning to come out to make sure that they come out of it as smoothly and as easily as possible. How long do you think you can survive if things stay the same? Well, everyone seems to think that it almost reflects there's not an awful lot of problem going on there back in May, doesn't it?
I think also I'd say there that I don't know, Claire, whether we've got the statistics at all available in terms of which industry said what. But given that a lot of the respondents were in the legal and financial sector, certainly in the legal sector, the legal sector tends to be quite notorious for a lag in effects within the general market. So there's many people that I speak to that are within the legal sector, work in the legal sector, and have a good insight into the legal sector, that are suggesting that the times we're in at the moment, there's going to be a delay to the legal sector, simply because of the way that they work and the fairly traditional nature of that particular sector, law firms. So they're not expecting to see the kind of effects that other sectors are seeing until well into later on this year. So it'll be interesting to see how the legal sector responded to a lot of these questions. I think you're right, John, that in May, there was a lot of unknown unknowns, weren't there, really, back in May. So I think that, dare I say it, those businesses that were saying that can they survive if things stay the same for 12 months plus? I'm sure many businesses have strong cash buffers and a strong balance sheet. But dare I say, I think there's probably many businesses in there that perhaps either didn't understand what the impact was going to be on them, or thought that, or was simply burying their head in the sand. But also the other factor being is that the government, very generous government support, has managed to keep a lot of businesses going for a good period of time. And you have the so-called zombie businesses now that would have gone under quite a few months ago, were it not for the generous government support. So I think it's an interesting slide, and I think that it's quite a complicated answer that sits behind it, I would imagine. Yeah,
just adding to what you're saying there, Matt, about the zombie businesses. It's interesting that we'd had a spike in insolvencies immediately before and immediately after Christmas. And I think the profession as a whole were thinking, oh, it's going to be quite a busy year. It's something which we've been expecting, coming for quite some time. There's been a lot of discussion about the zombie businesses out there, and then we're hit by this, by the COVID coronavirus, which is it was totally unexpected. It hit people, and so those businesses will have hunkered down, and I think the ones who were sort of ready to go, if I can put it in that fashion, before the lockdown, will be probably the first out as we come out, because they'll be found out quickest. They'll have the weakest balance sheets, and the cash flow will be crippled, I think, very quickly.
I think we'd be really interested as well for the viewers on here that as we go through these slides, what you're experiencing. So do drop a chat there to let us know what your experiences are. Particularly given that John and I have already mentioned that this is a survey that was carried out in May, so a long time ago in the current climate. So please do put something in the chat.
Thanks, everyone. So we then moved on to asking businesses how they were coping financially, and again it goes back to the business confidence, because as you can see, the majority of businesses felt they were coping well or coping very, very well. There was none that said they weren't coping at all. And then obviously you've got just over 10% who said coping but not that great, and then about 23% who said they were coping but just okay. So again, I think that goes back to it comes back to the confidence that I think businesses were showing at the time. And as you've said, I think I'm not going to dwell on this too much, because I think this does go back to how how that would look different today to how businesses think they are coping financially. So I'm going to move on to the next question that we discussed, and one of the questions that we've picked specifically for today's webinar really was, obviously the business confidence was very, very high. So we then asked if people were actually actively speaking to clients to discuss their payment arrangements to make sure that invoices were getting paid. And this showed quite a lot, certainly for the four of us on the call today. You can actually see that 46, I think it was just about 46% were not speaking to their clients. And you've got a further 28% who were only calling a few as and when they had time. So if you add those two together, for me, that was quite telling that they were really, really confident in their business succeeding. But actually, there was disparity there with people actually making the effort to speak to clients about getting paid. Matt, John, do you want to add something to that?
I think, yeah, John, do you mind if I just go, because this falls a little bit in my area, and it's something that something I've been seeing a lot. Just before we go on, Claire, there's just something in the chat there that one or two of the viewers have been asking about the colour coding. What do they denote?
The colour coding is just obviously the different. What I will do is I will circulate a copy of the full result findings to everybody after the webinar today. So you will get a full copy with full annotation. The colour coding is just literally on this graph is just denoting the different results.
Thanks. Thank you. Yeah, so this was quite interesting to me, because fully there's somewhere around 70% of businesses that were didn't have necessarily it seemed any particular strategy in terms of engaging with their customers to get paid for the goods and services they provide. So none were worryingly well over 40%, and a few, when they had time, were just under 30%. So those stats added together paint a fairly worrying picture, and quite tellingly, I'm working with a client at the moment that is just having those kind of problems right now. They've not been able to contact some of the customers they've tried to over the period of months. And now the customers that they are trying to speak to, they haven't spoken to before. Lots of customers were actually working through that period, and they didn't get to them either. So what they're now seeing is there's somewhat of a backlog of payments. There's a lot of payment plans that are being requested. But also there's a lot of administrations that are happening right now. So if those conversations were had with those customers before now, then recovery of the debt that's owed could well have happened before those businesses went into administration, and therefore ending up with a bad debt. So I think that this is something that I've talked about for many, many years. I've been a credit manager for 20 years, and what I've always been an advocate of is meaningful conversations with your customers, whether it's a problem with a payment or just building those relationships. It doesn't necessarily need to be a problem. And I think over this period of time, there's been too many businesses that haven't really done that before. And so they're not really doing that. They haven't been really doing that over the last few months. The businesses that have come out of this stronger, in my belief, are the ones that have spoken to their customers throughout this period, lending the necessary support to allow those customers to pay them for the goods and services that they provided. So yeah, it's very interesting statistics. John, what do you think?
Yes, well, I mean, I suppose it's not something that we get involved with, certainly nowhere near as much as you do, Matt. It's astonishing, really, isn't it? But maybe we shouldn't be that surprised. I think with the onset of the virus, then I think there's a natural reticence among people to to be seen to be making things worse for others, certainly at the outset. I think as the time has gone on, people are going to realise that their cash flow is going to be dependent on collecting debts, and so they should have been speaking. If they weren't speaking to clients, then they certainly should have been, and they certainly ought to be thinking about that now as we begin to come out. Because, as you point out, if people are going to suffer as we come out and go into administrations or liquidations, they've lost their chance to collect some money, if not all, from their clients. I suppose a lot of people don't talk to their clients because they're frightened of possibly losing them as clients or customers. I mean, I've seen that in my own time working for other accountancy practices in the past. Was physician, here yourself, because I'm always astonished how bad we were in that particular firm at collecting our own debts. So yes, that's very interesting. And again, if we were to ask the same question again today, I wonder whether that graph would look quite the same.
Yeah, and again, I'd be interested for other people's experiences that are on the call here. I know there's one or two really good contacts of mine that I've noticed that work in the legal sector, for example, who are notoriously challenged when engaging with their clients, and many other different industries as well. So it is quite industry specific, John. I think there's the legal sector and accountancy sector, and certain sectors don't really speak to their clients and customers about payment, and it's not all about the hard tough enforcement of a debt collection. It's more, this is all more about building those relationships, and then throughout this period, providing that necessary commercially astute support to your customers, so that when you come through this period, those customers are going to remember those suppliers of theirs that have lent that support through that period. So, so I think this is, it's an interesting stat as far as I'm concerned. Very telling.
Very good point. Very good point indeed.
I think that leads on to the next question, because we then looked at why they didn't or why they weren't speaking to the customers. So you can see here, I think it was about 5% assuming that the client couldn't afford to pay the bill due to COVID-19. It was assumed that everyone was in the same boat and didn't feel like that they wanted to add to the woes of that client. But you've got them all the way up to 40% sort of saying no need to speak to customers because the customer has always paid on time. I've got a trading history with that client. They've always paid. Do you think that that's a good way to operate? What are your thoughts on that? What would you add to some of the findings there?
I think as far as I'm concerned, I go back to my original point to some extent, and we've probably got a little bit ahead of ourselves. But I think that assuming that particularly in this period of time, assuming that just because it's happened that way and they've always paid on time, therefore they'll always pay on time, irrespective of COVID-19, is poor business practice anyway. If you're not speaking with your customers, then you don't know what's happening with those customers. There's a whole range of factors that might not cause them to pay on time the following month, even though they've always paid on time. And if you're not speaking with those customers, you don't know. Making assumptions on anything to do with finance or anything to do with sales or anything to do commercially with any business is in my view dangerous business practice. And the unfortunate truth is that lots of businesses have gone into real financial straits over this period of time. Some of them out of their control because they've had to close down for a variety of reasons, but some simply because they've always done things in a particular way for so long that they've assumed that will continue, and frankly, it doesn't.
Quite agree, Matt. I mean, if you're going to be unkind about it and look at it, it just smacks of very dangerous complacency, doesn't it? I find it fairly astonishing. I mean, I can understand that some people feel uncomfortable about ringing their clients and asking for payment. That I think is wholly understandable, and doesn't surprise me that we got 10% or whatever it is responding on that front. To assume that they can or they can't pay you either way is dangerous. If you assume they cannot afford, then what are they basing that assumption on? And maybe they should be taking some action straight away, because if it ain't going to come in, then it's not going to really hurt having a go and talking to them and demanding payment if need be.
I'd be intrigued. I would be intrigued to know as well, John, what the in terms of the payment arrangements. And we weren't actually specific in terms of what payment arrangements were in place. So I'd be intrigued to know what businesses meant when they were talking about payment arrangements. That could be a multitude of factors. But going back to what I was saying earlier on, there's one of the clients that I'm working with are having a lot of installment plans, payment plans that are being proposed to them, and that's simply because that's for a range of factors. Those customers may have been closed down for a period of months, but it could be a lot of them, worryingly, had really robust cash buffers before COVID-19 and the lockdown kicked in, and they've been really eradicated. They've worked throughout that period, but those cash buffers have been reduced and reduced and reduced. And going back to what I said earlier on, making the assumption that because those customers already paid and not actually speaking to them when they haven't, more importantly, means that lots of businesses may well be in the position now where they're not getting paid at all, or those businesses aren't able to pay. So then they're being approached for payment plans. Whereas if you were speaking to your customers several months ago that may have been still working and spoken to them then about the debt that was outstanding, you could have done something about it a lot earlier, rather than several months down the line.
Yeah, quite right. Can't add anything to that.
I think there is. I know that the stats proved 11% felt uncomfortable asking. I think there is some of that, isn't there? There's a little bit of reluctance to speak to people about chasing payment. Is there any sort of tips you can give, Matt, for how to get over that uncomfortableness? Is there any tips that you could share today?
I think the main tip that I would share is that good credit management, and I noticed that there are a few people on here that are credit professionals or oversee the credit control department. Good credit management isn't about chasing debt. A credit controller, a good credit professional, isn't a debt collector. And I've had to explain this distinction to people that may not know a few times. A debt collector is enforcing a debt, in my view. A credit controller builds relationships, and that means that they get paid. I see credit control somewhat the same as sales in some respect. I was always very bad at sales, but a good salesman doesn't overtly sell to someone necessarily. They build those relationships first, and the byproduct of that is that they then can sell to them because they have those relationships. It's the same that's true with a good credit controlling. It's about building those relationships, and the byproduct of that is that you're able to ask for money or payment or early payment when you need to, a lot easier than you would do if you're not actually building those relationships in the first place. It's always the case, and always has been, that it's a lot more difficult to recover an old debt than it is to recover one that's more recent. So that means that building those relationships with those customers and having those conversations with those customers regularly is absolutely key.
Thank you.
Yeah.
So we're now going to go over to some questions and answers time. We did put a shout out on social media for any questions, and to be fair, we've had quite a few, but we'd also like your questions. So if you could use the chat box, and we will be reading them out and we will be answering them. So I'm just going to bring everyone back so that you can see everybody. Okay, so we've had a few comments in the chat box at the moment. So a comment here saying, spending a lot of time helping companies with pre-COVID debt. I've asked them why they have not asked for money at least. So I think that goes back to the comment about people being reluctant to ask those questions, isn't it? It's taking those proactive steps now, and building those relationships. So another question that we have is, what lessons could businesses learn from this crisis, and what positives should they be making now? So John, do you want to, over to you?
Yes, you can do. I think we've answered quite a bit of this question already, haven't we? I don't know how much to reiterate on it. I mean, it's clear that when we went into the lockdown, companies were totally unprepared for it. I don't think anyone could foresee that we were going to be shut down to such an extent and things were going to grind to a halt. And the government measures which were put in place have certainly mitigated that for the time being, and we're seeing now that that's coming to an end. What lessons should they learn from the crisis? What changes should be making now? Well, I suppose lessons learned is a difficult one, because I think we're still learning stuff, aren't we? I think the stuff that Matt's been talking about, the keeping on top of your credit control and the rest of it, which is so important for business anyways, it maybe reinforces all of that in people's minds, and they should be looking towards, if they haven't got things in place or haven't had things in place before, then it will sort of make sure that you do have that in place. I think the big lessons which are going to be learned and where changes probably will be made is as we come out of the lockdown. Lockdown and working from home has produced a lot of challenges for which people are unprepared, as I say, but systems have evolved, I think, during the period, and business owners will be wondering whether they need to return to the old ways. I think to many, offices may suddenly become an unnecessary thing to have. There may be savings to be made, and it perhaps seen as a bit of an expensive luxury in many cases.
Yeah, I think that's true.
So return to work. Return to work. It's all about cash flow, isn't it? I don't think I could say anything more than what people have got to look to really is in preparation for it is get your cash flow forecasts and other forecasting prepared. Talk to your accountant, make sure you're liaising and taking proper advice at this stage, because you may well have had furloughed staff, and you may well have borrowed some money, and you may well have deferred quite a lot of debt. But at some stage in the not too distant future, you're going to reach that wall of debt, which is going to hit your cash flow very, very heavily. So it's important to know how much and when, I think. So, I mean, just as sort of bullet points, I've jotted down here, and apologise for reading them out, but what you're going to need very quickly is a business plan that forecasts profit and loss, probably for at least 18 months. Cash flow forecast, absolutely essential for definitely the same period, and maybe a more detailed one in the short term, taking you up to at least the September quarter day, and probably the December one, when extra debts are going to come in, the VAT man's going to start collecting his money, and landlords are definitely going to start demanding rent again. Identify the timing of any cash shortfalls and provide for these in advance if you can. Consider what extra finance will be required and ensure that extra borrowing, if it's taken on, can be serviced. If at all possible, build a cash buffer. Well, how easy is that? Probably not much at the moment, but if you can do it, and provide in advance for payments of tax, that's your VAT and your PAYE. And the final one I've jotted down here is start collecting your own debts now before being caught in the rush, which I think is something we've just discussed, isn't it? I think we ought to bear in mind that the possibility of a second spike is hanging over us at the moment, and if we do get a second spike, this could be far more destructive than the first.
Yeah, good point, Joe. I think also you mentioned about technology, and I think that's quite important. I think that's an important one that we could learn from this. I've been, throughout my whole career, I've been hearing about working from home and the paperless office and all of that. Anyone who's working back in the late 80s, you remember the paperless office. So all of these new innovations that would happen, and they never really did. You still end up traveling up the M6 for 3 hours to do a 1 hour meeting and traveling all the way back again. So I think that this has really kick-started a lot of the innovation around technologies that people can do, and they've learned that they can actually work from home, and some people could be more productive. Not all. So I think that certainly there's an adaptability element that we can learn from this. So not everyone needs to be in the office, and not all businesses are more productive by having people in the office. And I was speaking to someone the other week, and I think it was a presentation on the Katina network, actually, where they were talking about the fact that lots of businesses have got all this office space, and they're now renting that out to hot desking people. So they don't actually need the office space to have all their staff. They don't need which allows you to then grow your staff and get the skills from where you need them in the country, irrespective of where your offices might be. So you can be recruiting the best skills from Leeds, but your main office is in Southampton because you've got the technologies to do it. We all now do Zoom, and we all do Microsoft Teams and things like that. So it just gives businesses a lot more chances to be adaptable. And I write for the CICM magazine, and one of the articles that I wrote there is about the future of a good credit management department, and I talked about the right skills in the right places at the right time. And I think that this really is at the moment a real opportunity to be able to do that. So any business, if they consider that they could, in theory, recruit the right skills from throughout the world, if they've got the right technologies in place, then how good would that be, rather than having a small pool of specialists that just are around your office? You've got the whole world to go to. And I think that's something that we could really learn from this. I think that's the big thing, is the skills, right people in the right place at the right time.
I think you're right there, and that sort of leads on to another question we've got, which is about social distancing and other restrictions that we've got. Obviously, John, you're in the Leicester lockdown as well. Do you think that for some time to come there's going to be that disparity, and do you think there's going to be certain businesses that are going to really struggle with the changes going forward? Is there any industries that spring to mind for you both?
Certainly in Leicester, without giving it too much thought at all, because we've seen it in the news, the textile trade has highlighted itself in the most unfortunate manner, which has been spread all over the news. But I mean, those sort of businesses, textiles, possibly even the outdoor businesses and industries like, farming in Lincolnshire, meat packing, that's another one, isn't it, where we've seen spikes in the virus, where it's obviously is having quite an effect. So yeah, social distancing and those, it's going to be around for a while, isn't it?
I think there are certain industries that as I said, are going to be hit. It is such a complicated picture that I say that different industries will be hit at different times, but then there'll be subsections within that where certain businesses are doing okay because they've adapted to this, and they've not had to close down like the retailers over the past few months. So there's certain businesses within certain industries that are actually doing a lot better because they've been able to adapt more. And I'm thinking about retailers, small retailers that have gone online, for example. I was at a florist only today because I'm a fairly good boyfriend sometimes, and so I was buying some flowers, and the florist there said that she'd been closed for most of the duration and recently opened up, but her online sales are flying because she's had to adapt. She's now gone to online sales. More than to the extent that she was saying that she's got a shop in the high street paying really high rates, and she's questioning whether there's a viability to actually even have that shop there as well. So this could actually have a fundamental effect on the high street, not just with businesses that are closing on the high street, but with businesses that are actually choosing not to have shop fronts in the first place. So it's the future picture is complicated to say the least, but as I said earlier on, those businesses that can adapt are going to really do quite well, and they're going to be the ones that are going to create, those stronger industries in the future.
I think
one of the things that occurred to me. I'm sorry, Claire.
No.
That's the problem with Zoom, isn't it? Get in there quick. I was thinking about the leisure trade, the pubs in particular, and some restaurants where they've adapted very well to coming out by being able to spread outside. So they might have small business inside where they can't get many people, but they've managed to spread into the garden or into the beer garden or wherever, which I think will be fine while the weather's good. But I do wonder, how well they're going to fare when the weather, in the not too distant future, we're getting into autumn and winter. Is it still going to be viable for people to sit outside and enjoy their meals or beer?
Yeah.
I think that brings us on to, we've got a question from one of our guests today saying, as technology is out there, why is adoption so slow, i.e. AR teams still collecting cash, manual or spreadsheets? Having worked in AP, I've seen a lot of changes in intelligent automation to help process suppliers' invoices. Why is AR different, and what's your viewpoint?
What a good question. It sounds to me like that's a credit professional that's been around for probably as many years as I have. Why do credit control teams still use spreadsheets rather than adopting technologies? There's probably a very direct answer to that, and I think lots of businesses will look at their revenues as opposed to their cash flow. So they look at their balance sheet and they see their revenues and their sales are very good, without necessarily thinking about whether they're getting paid for their sales. So that same person that's asked that question probably knows the cliche about a sale is not a sale until it's been paid for, and that's a cliche that I trot out regularly, but it's true. So if you have a business that's making a sale, for every day that invoice is overdue, that's cutting into the margins that business is making, and then you're adding on the extra costs, such as the credit controller chasing for that money, or there might be a dispute, so then it's customer services, perhaps if it's a larger organization looking into that dispute. So before you know it, the margins that you've made on that sale have all been cut away to such an extent that you're perhaps even making a loss on that sale. So it's really important that businesses assign as much importance to collecting money, their AR / credit control departments, as they do to their sales force and to any other part of the business. My own view with credit management is certainly for the larger business, it should be the hub of the business. So credit controllers and that individual that asked the question, they will probably know this full well. Credit management teams speak to most other areas of a business, whether it's sales, whether it's customer services, whether it's commercial. So they should be the hub of the business because they have the somewhat the all-seeing eye on the rest of the business, on what disputes we might have, on what risk analysis we're doing, on what sales might be happening, or what areas of issues there might be within sales, for example. So not investing in technologies in the credit management department is completely self-defeating.
Do you think going forward there will be a lot of development in technologies and processes and software to handle a lot of those new developments?
I hope so. And I've spoken about technology before, and there's lots of businesses out there that provide that technology for reasonably low cost. I don't sell them, so I'm not on commission, so I can say that. But there's lots of businesses that sell that kind of software, which are those credit management dashboards for not a great deal of money. So if you're spending, for the sake of argument, £1,500 a month to have one of these dashboards, but your recovery rate is a lot higher, then do the maths. So it doesn't necessarily mean that you have to invest in these really expensive systems, IT systems for your business. You've got online portals and dashboards and things like that you can just put that out to those other businesses. So you still keep control of chasing your customers, and all of that, all they're doing is providing a platform that makes your life a lot easier and much more efficient.
Brilliant, thank you. One for both of you, really. Do you feel that the government support that is out there for businesses at the moment may be masking the true success or nature of businesses so that they feel that confidence is high?
Oh, John, that one's you. You've got one or two things to say about this, I'm sure.
Yes.
I'll sit back.
There's a simple answer, and I think that I'd certainly, I think that this level of support has, well, it's masked it, hasn't it? It's we're not going to see the true state of business whilst we're in lockdown, and whilst businesses are being supported by third-party forces and assistance from the government. Where we're going to see it is when we come out. Oh no. I mean, the fact that we've had very little work as an insolvency practice over the last 4 months, I think, just shows that up. Normally we'd be expecting a few jobs every month. We've had, well, pretty much nothing. When I was addressing this question in the lead up, I was having a look again, and I've already sort of discussed this, that we were having that spike in January, and expected there to be more insolvencies for the zombie companies to be grinding to a halt and needing assistance, and it didn't happen. And I do believe that those companies will pick up where they left off as and when we start to come out. I mean, the most recent insolvencies that we had before we kicked off, the directors, you always get a theme in what the directors are blaming the failure of the business. And there was a twin factor here as we were going in, that first of all, they said we had Brexit, fair comment, I suppose, and the turmoil and the lack of confidence that it had imbued in businesses for quite a long time. And then we had an election which just carted that across Christmas. And so those were kind of, when explaining to the creditors why the business had failed, seemed to be at the top of their list of the blame. As we come out, I dare say we're going to get an awful lot of, it was because of the virus. A lot of it with some truth, probably most of it. Ultimately, I think it will have a terminal effect on a lot of businesses, this lockdown. It can't help but do so. So, yeah, I mean, I've written down, scrolled down a note and said the various schemes may well have done little more than delay the inevitable for many businesses. It is now a critical period, and we will see who's going to survive as the lockdown is lifted and we come out of it. I did make a little note here. I don't know whether it's relevant at the moment, actually, and it was really about, it comes back partly to the difficulties in debt collection and some of the measures which the government put in place under this new act they brought in, the Corporate and Insolvency Governance Act, where they introduced a few temporary measures just to get us across the COVID period. There's a new restructuring plan. There's a suspension of winding up petitions and statutory demands, which I find interesting. And all these, although they only came in at the end of June, were backdated to the 1st of March. And they're going to go through, and the end promulgated at the moment is the 30th of September 2020, which isn't far away at all. There was also suspension of wrongful trading. Now, wrongful trading, don't want to go into this too much because I'm not sure this may be an answer to one of the future questions. It's where a director causes a business to continue to trade after the point at which he knew or ought to have concluded that the business could not avoid insolvent liquidation. Bit of a mouthful. But basically, if you fall foul of the wrongful trading provisions in the Insolvency Act, you can be brought in as a director to personal account for any of the debts which have been incurred after the point at which that director knew or ought to have known that he couldn't avoid liquidation. Can get a fine, can be disqualified from being a director. So what they've done here is the government has turned around and said, well, look, chaps, we want you to keep your businesses going. If you do or would have fallen foul of these wrongful trading rules because of the virus, it don't matter. Now, nobody knows whether this is going to have any effect at all. I think as practitioners, we would still be investigating and reporting to the relevant authorities things like wrongful trading.
I think also that there's this really terrible phrase, but it gets right to the nub of it. It's, zombie businesses. You know exactly what it means. It's a really unfortunate phrase, but you know what it means. Yeah. And I think, as you were alluding to there, John, and I'm seeing as well now, you've had a drop in businesses failing over this period simply because they've either been closed for a period of time, so they've been not actually been really trading at all. But also they've had the business support, which has kept them somewhat limping along, I suppose, really. So I understand that the support that the government put in place, they had to do that. They had to prop the economy up, and they had to prop the businesses up, and they had to prop the people up that work within those businesses. So they had to do it. But someone used the analogy with me a long time ago that the economy is like a rusty old car. It's quite easy for it to get shut down, but quite difficult to get it started again. And I think that's quite telling here. How are we actually going to get the economy started? How are we going to get the businesses started? And the effects of that are going to take years, but it's, as I said, more than months now. It's a really complicated picture, and no one really knows how it's going to play out.
No. And one of the things which I'd meant to mention earlier to one of the earlier questions, which I think, as we come out, as demand picks up, as trade picks up, there's going to be a real danger, I think, with some businesses actually over trading and running out of cash. It's back to the cash flow again. It always comes back to cash flow.
It does, yeah. I think also, just to finish, I don't know if you've got some other questions there, Claire, but the benefit of this, and we're talking about the future as well as what's gone on so far. And we all know the tragedy of all of this. But if there's going to be a positive light out of this, I think that the businesses that can trade through this and come out the other end, they're going to be the strength to the industries that are in there. And I know that it feels like I'm picking on sometimes the legal sector, but you're already having disruptors that are coming into the legal sector because they recognize that they can actually provide a certain service and run their businesses a lot more effectively than a lot of traditional law firms that might have been around for 200 or 300 years, and they've always done it a particular way, very traditional, and they've been slow to adapt, and they simply don't have the infrastructure in order to adapt. So once we get through this, the unfortunate truth is that lots of businesses will go bust, and the law sector won't be immune to this. So when you get out the other end, you're going to have a lot of industries, a lot of sectors, I think, that are going to be a lot stronger for this, because there's going to be those stronger businesses and those disruptors that are going to cause that effect of strengthening those industries. That's my view.
No, I think you're absolutely right. And what's also interesting is if you have a look around the place, there's quite a lot of acquisition going on in the legal sector.
There is. Yeah,
you're getting some big acquisitive firms who've grown almost from nothing, who are buying things hand over fist. I can think of one practice in particular. I will not name them. I'm sure you probably, if you read your business link and the rest of it, you'll have seen it. I think they just purchased another business somewhere in the Midlands only the other day.
Yeah, we might have time to squeeze in another question, I think.
Well, yeah, I just wanted to wrap up really.
Okay.
Both of you are primarily in the East Midlands. I know you both work nationally, but how do you think the East Midlands is holding up and shaping up to come out of the COVID pandemic? Do you think the East Midlands is being a positive force? Or do you think on a national level it's all working together? I think I'm based in the East Midlands too, and my client base is East Midlands. I'm seeing a lot of positives. I'm seeing a lot of businesses helping and supporting each other. I don't know whether that's coming across from because obviously you see the other side of the coin. Do you feel that the East Midlands is coping, is holding its own?
I feel it's quite difficult to read, I've got to admit. I think there's obviously challenges, to the Midlands in general, with Leicestershire having been locked down, and obviously the talk is that this is going to be the future, where there's going to be local lockdowns. I hear that Derby has got some problems as well, and that's where I live actually. So I think there's going to be some challenges there, which we can't possibly see. But my experience over the last few months, in terms of speaking to other business people, the business as a community, I think has been entirely supportive. And Claire, both Claires, we know each other well, and I don't know what you think to this, but I think the business as a business community have really stepped up, really, and really supported each other very, very well. And I know that that's probably relating more to the smaller side of SME businesses rather than the larger corporates, just by the nature that smaller SME businesses, I suppose, swim in slightly different pools, and they go to networking meetings and networking events, and their engagement with their own community is a little bit different to the larger corporates. But I certainly think that in terms of small businesses, I think the community has been entirely positive in that respect, notwithstanding all the financial problems that we've had, but in terms of engagement within the community and in the East Midlands, I think has been very, very positive.
Yeah, I don't disagree with you, Matt. Leicester, I think, is a case in point. Obviously, it's affected my business to some effect. I mean, we've been working from home, so it hasn't really, I guess I could have gone into the office had I so wished. And members of my team who were within what we call the plague ring had no difficulty getting in when they needed to into the office to collect files or whatever. But I think there's some businesses which I do particularly feel for. I mean, we're back to the good old pub trade again and the restaurant trade. I think they were all getting ready to unlock and looking forward to getting back to business and earning some money. Probably unfurloughed staff spent money which they probably the dregs of their cash flow on getting in stock, beer, food, stuff. And then they suddenly get locked down again. And that stuff, by the time we come out of it, will be out of date. They'll have lost it.
That's true.
So I think that's it's kind of a double whammy for them, isn't it? It's a bit of a kick in the teeth for those people. And I wouldn't be at all surprised if someone who were going to reopen don't manage to do it now.
Yeah, true.
Brilliant. Well, thank you very much. If there's any more questions from any of our guests today, please pop them in the chat. But certainly that's all the questions that came in via social media or through the chat while we've been discussing today. I would just like to say thank you very much to both John and to Matt